A prescription for excessive debt. I'm Jill Horner. This is Comcast Newsmakers. With me is Joan Redding. She is the president of Credit Counseling Center. Thanks so much for being with us.
Thank you for having me.
You have a nonprofit organization, and you help people on a regular basis deal with excessive debt, including credit card debt. But let's talk a little bit about your prescription for excessive debt. Many people find themselves in situations where they're facing a wide variety of debt, whether it's credit card debt, mortgage debt, car payments, and they don't know where to start. Talk to us a little bit about what your prescription actually includes.
Okay, when it comes to the credit cards, the first thing I would do is try to make an assessment of what kind of balances you're carrying. And if you are carrying a balance, I would suggest you take the credit card out of your wallet, put it aside, and assess the damage, so to speak. When I say damage, I don't mean, but my question is, if you're carrying a balance, then you're paying interest rates, and there's a cost to that. So I want to find out how much balances you owe, and then to figure out the best way to pay that back.
Because people may have more than one credit card,
Right.
and they may have interest rates that vary on these different cards.
The average credit card interest rate, say for store cards, Macy's, Sears, etc., it's about 22% interest. And it's an interesting thought when you think about your car loans are usually around 8 or 9%, your mortgages are hovering around 4, 5, 6, or 7%. So it's interesting that people go shopping, say, for a pair of shoes at 22%. And if somebody offered you a car at 22%, you'd say, no, thank you. So it's fascinating what we do with our credit cards.
So many people, you say, don't even know how much they owe?
That's very common in the office. When they come in, they didn't really add up all the balances. They might have 4 or 5 credit cards, $4,000 or $5,000 a piece on each credit card. So they didn't add up the total. Is it $20,000, $30,000, $40,000 worth of credit card debt?
So those are some of the first things that we should do, that we should add it up, find out what we're actually paying in terms of interest rates, and know that total number. But then we should prioritize. What should we do in terms of prioritizing these payments?
Okay. Go back to your other question in terms of prioritizing. Your mortgage has to get paid first. Your car has to get paid. Obviously, it's secured debt. For the credit cards, you want to take a look at what's charging you the highest interest rate. I've seen interest rates as high as 29.9%. So that's the kind of credit card you want to take out of your wallet, put it aside, and start paying that one down first.
So paying that one down first, but what about minimum payments? Should we be making minimum payments on all the cards?
You have to start with a minimum payment. You should start paying your minimum payments at least, but you need to pay more than that. Because if you pay the minimum payment, it will take you years. It can take up to 20, 30, 40 years to pay back some of these credit cards if you're giving them the minimum payment and they're charging 29.9%. It could be impossible to pay that back.
Can we ever consolidate credit cards?
Yes, I'm glad you asked that question, because if you come to the Credit Counseling Center, we will consolidate the debt and set up a payment plan to pay it back. And the interest rates are reduced and the minimum payments are reduced. So we work with the client and we work with the creditor to pay that back so you can afford your lifestyle and your household and still pay back your debt.
The bottom line, though, is that you recommend that people actually stop spending.
Right. Part of what we do in the office, in the counseling session, is to go over a spending plan and to see why the use of the credit cards and why not using cash, and go over what you're doing in terms of your savings and your other spending habits, so you're clear to try to pay off that credit card debt.
It can be very overwhelming, and
It
we
can
just
be
have a
very
short time left. When you think about $20,000, $30,000 in credit card debt, can you help people really see the light at the end of this tunnel?
Absolutely. It's to refocus and reprioritize to pay you off your credit cards and still get your household spending in line.
And just a few seconds left, but yours, the Credit Counseling Center, is a nonprofit entity. How do we find out if we are actually working with a legitimate agency?
Make sure that they are nonprofit, they're connected. We are connected, for example, with United Way. So you want to make sure an agency is connected to your local United Way agency.
Thanks for being with us.
Thank you very much.
We've been talking with Joan Redding. I'm Jill Horner for Comcast Newsmakers.